Welcome to Bloomberg Queen. This is the Market Wrap. I am Vakil. We have seen the benchmark indices snap their 5-day losing streak with advances on both the Nifty and the Sensex. Let me take a look at the Nifty. We are looking at gains of as much as 0.2% and steady gains coming in for Dr. Reddy's on the back of earnings, and it is the same for State Bank of India as well, leading the public sector banks upwards. Bajaj Finserv and Tata Motors among others, along with Bajaj Auto leading gains as well. On the losing end, weakness coming in Indian Oil Corp, Ultratech Cement seeing some profit taking in, Bharti Infratel also declining by as much as 1.8%. However, the positive is that when it comes to the broader markets, the advanced decline ratio, at least on the Nifty 500, is towards the positive. So we have about 3 gainers for 2 losers, and in the gainers, 8K Software, we did see a lot of weakness yesterday. That's advanced up as much as 20% now, and well, gains coming in for PC Jewel as well. But Rampur Chini as well extends its gains up another 11%. JP Associates up 10%. On the losing end, Symphony reacts to its earnings, poor set of earnings coming through, and on the back of that 12% decline, and well, more weakness for a lot of these city gas distribution companies. So Mahanagar Gas down nearly 6%, Vakrangi, and of course PNB Housing Finance also seeing some amount of weakness. But what do we make of these cues, especially given so much volatility? Let's bring in our markets editor Neeraj Shah to get some perspective. Neeraj, how's it looking now?
Hey, so the good part, Agam, is that, remember, yesterday we were talking about how the market looks so terrible, but a surprise bounce back, especially in the small cap end of the market. So maybe that augurs well, but I think the template is looking very clear. Good news are getting rewarded disproportionately. Bad news are getting punished disproportionately. Though I wouldn't say Symphony was disproportionate reaction, probably an apt reaction for a stock which is terribly expensive. But some of the other names as well. I mean, the corrections continue into spaces like Mahanagar Gas and a few others that you marked as well. So that is interesting. The other good part about today's session seemed to be the case that beaten down names and beaten down pockets where there could be some value are seeing some bounce back. So the auto names, for example, did see a commendable bounce back in the session today. Tamo, Ashok Leyland, Bajaj Auto and a couple of others did move up and did move up quite substantially. So that's interesting. No great other cues except for today, the bunch of results. Tomorrow we have the Fed minutes coming out. So the global markets would probably keenly be watching out for what the Fed has to say out there. But aside of that, you probably dance to result reactions and hope that the macro, which is looking very, very toppish right now, very worse right now, does not worsen even further. So I think all fingers crossed of that. The micro is working well. We just need the macro to not play spoil sport.
Right. Well, we are heading into the last 1 odd week for the results, and of course the Fed minutes is something we're going to watch out for. Thank you, Neeraj.
Thanks, Agam,
for joining us and giving us the perspective on the markets. But what are our technical experts telling us when it comes to various levels to watch out on the benchmark indices? Listen in.
Higher levels around 10,560, 570. That's a very strong resistance zone. So on the Nifty futures, one can go short in the range of 10,565 to 575 with a stop loss of 10,616 and a target of 10,485, 490 on the downside, because we are seeing some selling pressure also coming in at higher levels, whereas on downside, yes, there seems to be some protection.
So what we are expecting is that the fall could extend right up to say 10,470, and that's why short positions can be initiated. A stop loss can be placed at around 10,580, and the bias would clearly stay on the negative side until unless we don't close about 10,600 very confidently.
So those are some of the levels that you can watch out for. But the big mover in today's day of trade was State Bank of India. Surprising numbers. Well, let's find out whether or not they have actually come out in respect to expectations. We have Shraddha Babla joining us to give us an update on the same. Shraddha.
Well, yes, so Agam, so while the bank did report a much wider than expected loss of 7,700 crores or so, I think it's the absence of any major negative asset quality shock which probably explains the 4 or 5% rally that we've seen in the share prices. The bank attributed that 7,700 crores of loss to higher provisions on account of MTM losses, incremental NPA provisioning and provisioning against wage revision. When it comes to the headline asset quality numbers, while they did deteriorate further because the gross NPA number came in at 10.9% versus 10.35%, in absolute terms, the gross NPA rose by just about 12% on a sequential basis, which would seem a lot better when compared to some of the PSU banking peers. Fresh slippages came in at 33,600 crores as compared to 25,000 crores in the previous December-ended quarter, out of which 86 were from corporate slippages itself, and about 33% or so came from power sector, which the stress in was already known and anticipated. So Agam, it's probably the lack of negative shocks which has driven that kind of a rally, but yes, it's been a wide loss.
Right, so we can of course say that it was lack of negative shocks, and that's actually played out well for State Bank of India. Thanks, Tata, for bringing us those details. But well, a development that we have been tracking on a daily basis is well, fuel price hikes, and we have crude once again in picture, and once again we also have Yatin Mota to give us an update on what's really happening out there. Yatin.
Well, crude is a spoiler, and despite the crude prices not touching the record highs, fuel prices in India have touched record highs. Of course, it is attributable to the rise in crude prices and also the kind of taxes which are levied by the state and the central government. So, fuel prices are something which is a cause of concern. Today, we had the oil minister also meet, the PMO office. They are also meeting the oil marketing companies. There is a sense of fear in the marketplace that probably now not only the states would be looking to cut the excise duty, but also will have the oil marketing companies which will bear a portion of the rising crude prices in order to probably control the crude prices and the diesel and fuel prices to such a level that it doesn't hurt the consumers. At this point in time, for several days in a row, we have seen a 15-20 paise average price hike in diesel and petrol prices happening. And if the trend continues, probably it will burn the pockets of the consumers. And the real fear in the market is that now not only the states but oil marketing companies will have to do something in order to absorb this price hike. So there is talk of probably the subsidy regime coming in, or probably the control on the fuel price, and probably that is not auguring well for most of the oil marketing companies, be it IOC, HPCL, BPCL. All of them have been facing tremendous pressure on the stock price.
Right, but Yatin, we've also seen an upside on something like Tata Motors. What explains that?
We have China and the US which have called off the trade wars. Earlier they were trying to push each other with quotas and with import duties, but now the Bloomberg report suggests that China may look at a 10 percentage points cut in the import duty of cars. And this benefits Tata Motors in a way that they import a lot of these cars from the European Union and the UK. And if that really happens, probably the cost of luxury car or owning an imported luxury cars goes down in China, and which might push up the demand as the price falls and as duties come down in China. China has been a very significant market for JLR. Over 22% of their overall volumes comes in from the Chinese market. And if that market were to reduce any kind of an import duty on cars and spares, that will augur well for a company like Tata Motors. Stock yesterday was below 300, and probably in that oversold zone, a positive news was something which supported the stock price and the moment today.
Right, so potential headwinds, or rather tailwinds, pardon me, coming in for Tata Motors. Yatin, thanks for joining us and giving us those updates. There you have it. Well, the market's looking up for now. Some improvement on the back of the weakness that we've seen through coming in as well. But with that, it's a wrap on the markets. But don't go anywhere. Lots more lined up, so stay tuned in the Bloomberg.